An indicator is just indicating something, right? It's not a red light, green light scenario, right?
Correct.
What it is, it's showing you what's happening, right? And they're all lagging indicators because they're showing you, look at, we're overbought because we got overbought, right? And the market's been going up. And now we're coming out of overbought, even though we're still relatively near the highs, but the momentum has died. That's the key. But just because momentum has died doesn't necessarily mean that the markets, go straight down or straight up, depending on the direction. The key is to watch other factors that help guide you through that indication. And so when you have an overbought scenario, the key is to look at other indicators for indications, okay, for that trade. When it comes to trading, it's not about predicting, it's about protecting. Okay. And when you think about it from that perspective, I can't predict that the market's going to go down just because we're overbought, right? All I can do is either I could protect my longs or I could get in a short position and protect that short. That's the key for me. That's all I want to be able to know, right? And so when the RSI triggers that for me, I then go and look at Bollinger Bands and say, look at Bollinger Bands. The mouth of the Bollinger Bands has been going higher. The bottom has been pretty flat. Typically, in general, when I see a Bollinger Band set up like this, a lot of times it's telling me it's going to be really choppy because the Bollinger Bands aren't clean and smooth. And Bollinger Bands, 20 period, 3 standard deviation, I want them to be smooth because it tells me directionally we're grinding higher or we're consolidating. Even though a consolidation may be choppy, I want to see a smooth Bollinger Band peak from top and bottom and come in because it shows actual mean reversion. Okay, rarely take a breath, right? Now we're kind of like, the Bollinger Bands are even confused by the action and they have no bias, no hidden bias. Also, Tom pointed out the moving average. We were holding above the 5-day moving average and we were going above it and we had consistent closes above it and it was also sloping higher. The sloping higher matters to me because it's not been enough time where the market's consolidated to where it starts to get flat or reverse its slope. And the reason why that's important for you're looking for a mean reversion or a, move back into the market, a reversal of trend, is that you're never going to pick the top perfectly. It's not going to happen. The only way you're ever going to pick the top perfectly is by guessing. And the most likely that scenario will still be bullish. And boy, you caught the top. Good for you. Right. And it's just luck. It is what it is. In my career, I don't know that I've ever caught a top and be like, that's the top. I might have felt like it was the top, but I never held it long enough to know if it was the top. So when you have these scenarios now where all of a sudden Bollinger Bands are flattening or reverting back in, moving averages are getting flat, and we're coming out from overbought, selling pressure comes into the market.
Yeah, things are lining up. When you see the bits of evidence piling up, then you feel a little bit better about picking a side like today.
Confirmation.